So I mentioned that Reddit is one of the fastest growing companies, social media companies in the world. And in recent quarters, its revenue growth rate has accelerated. The company's overall revenue from 2020 to 2025 has increased nearly 10x from 200 million to 1.9 billion. In recent quarters, the company is benefiting from its highly valued user-generated content that's highly valued because of its value to large language models and training artificial intelligence. So the next thing I wanted to evaluate is the company's return on invested capital, which saw a huge turnaround in 2025. Previously, it had been going in the opposite direction, falling from negative 53% to negative 193% over the previous 4 years. And then in 2025, there's a huge improvement from negative 193% to 71%. Now, this isn't enough data to determine for investors that, okay, this company is now hit the inflection point. It'll now generate positive returns on invested capital for the foreseeable future. That's not the case when you only see 1 year of data where the company is positive and then many, many years of negative and worsening trend lines in this particular metric. I like to see more follow through from the company's improvement in return on invested capital before I can feel comfortable that the company has hit an inflection point and will generate positive returns on invested capital from that point forward. The next thing I wanted to look at is valuation. So Reddit on a forward PE basis is trading at 66 and a forward price to OCF at 40. This is a premium valuation. The average stock in the S&P 500 is trading at a forward PE of around 25. So it's almost triple the valuation of the average stock. But I think it deserves that premium given its premium revenue growth rates, which is accelerating, improving returns on invested capital, and significantly improving cash flow from operations to sales ratio. Furthermore, when I look at its valuation using my proprietary discounted cash flow model, I calculated a fair value at 217 and a current market price of 222. So when measuring on my DCF, it looks fairly valued. When measuring on the market multiples, it looks undervalued. Overall, I will say that the stock is slightly undervalued, but it operates a very attractive business model and growth rates are accelerating as well as margins. So for that reason, I do think this is a buying opportunity for 26, and I will reiterate my buy rating today, December 4th.
Click the link below to watch the full video.